How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. As of today, we're sitting at $76,000.17, up by $882.33 since my last video. However, after last week, yes, we ended in green, but absolutely not a shot is this market momentum going to be lasting long. I think last week a lot of investors were excited about earnings season finally being here, getting to take a look at what a lot of these companies brought in last quarter. However, looking at that bigger picture, which is most important, we have lingering inflationary scares. We have the Federal Reserve about to pivot on their monetary policy come November. And last but not least, only a temporary fix regarding that debt ceiling. The government really didn't solve too much at all. They just pushed a problem down the road. So volatility to come, which leads me all to today's video, in which I want to talk about 5 dividend kings that you can literally get invested in today while they are down, they are undervalued. Kick back, relax, and collect on those dividends for decades to come. So a video you will not want to miss out on. Now, of course, before we dive in, go ahead, tap on that thumbs up button as it greatly helps me out in growing this channel. Most importantly, if you haven't already subscribed, go ahead, tap on that subscribe button while you're at it. I would not only love for all of you to join me on this journey, but want each and every one of you with an opportunity to take advantage of the $50 One Hope Wines gift card giveaway I have underway as we speak, in which one lucky winner, the moment this channel crosses 1,000 subscribers, will be sent that gift card to pick out the wine of their choice. So cheers to that. Now, YouTube, with all of that out of the way, let's dive right in. If I told you that there are companies out there that you can literally just invest in, kick back and relax, expecting that these companies are most likely going to be here for decades to come, and on top of that are going to be paying you dividends on a quarterly basis, all while most likely going up in value. Now, that is exactly what these 5 dividend kings and the other dividend kings out there are all about. They've been delivering through returns to their investors for decades. And not only that, but as I just mentioned, delivering through on those dividends. Now, these dividend kings have been paying dividends out for over 50 consecutive years, all while increasing those dividends year over year. So exactly the type of companies I want to have within my portfolio. I consider them to be incredibly safe bets. And not only that, but 3 out of 5 of them that I'm about to mention today, I would actually consider incredibly boring companies. However, it's those boring companies that actually make for very lucrative investments. I mean, just think about it. Everybody is typically looking for the latest, the hottest, the sexiest new technology company to invest in, but here I am investing in companies like these companies and actually faring very well for my financial future. So without further ado, the very first dividend king I want to talk about in today's video is Parker Hannifin Corporation. That's ticker symbol PH. Now, Parker Hannifin, originally known as Parker Appliance Company and often referred to as just Parker. Now, if that doesn't sound like an info ad, I'm not too sure what does. Regardless of the fact, Parker Hannifin is an American corporation that specializes in motor and control technology. So anything that falls within aerospace technology, refrigeration systems, gas generators, pumps, filters, valves, you name it, Parker Hannifin is probably a part of that deal. Now, when it comes to Parker Hannifin, the reason I'm bringing it up today, it is actually one of those 3 really boring companies that I wanted to talk about because they were founded back in 1917. So clearly an incredibly long, healthy lifespan that will most likely only continue on for decades to come. Now, I want to just take a quick glance at its stock share price because after 2020, it has certainly surged and made its way up to a high of $321 per share before coming down to around $290 per share. So certainly we can see right now it is currently selling at a discounted share price, which makes for a ripe opportunity to jump in on Parker Hannifin. Now, when it comes to that dividend, which is exactly why it's on this list, they have been paying their dividends out for 65 years and increasing that dividend year over year, with their current dividend yield sitting at 1.4%. And while that doesn't seem like that much, because honestly it isn't, what I'm going to share with you is that just getting invested in Parker Hannifin and holding on will certainly still fare you well because analysts have expectations that this company is only going to continue to grow with a median stock share price of $373 per share and a high stock share price of $450 per share. Again, that's not going to experience a ton of volatility, but allow you to sleep at night. Now, in my opinion, equally as boring yet just as lucrative, we have our next dividend king, that being 3M, ticker symbol MMM. 3M was founded back in 1902. It is an industrial products giant, most iconically known for Post-its and Scotch tape, yet they are producing products for industries across the board, anything from wound care products, structural adhesives, protective films, connectors, painting, and cleaning supply. Now, 3M is a company that is certainly not going to be disappearing anytime soon. It has been highly talked about over the course of 2020 and even till today. Now, in just taking a look at their stock share price, we can see that they ran up to a high of $203 per share before coming down to $176 per share. Most important to note about 3M is they have put together a restructuring plan in which they're going to be cutting their cost of operation anywhere from $250 million to $300 million, all while targeting their debts and aggressively bringing those debts down. Now, that is incredibly important because with that news, they are now poised to grow, with analyst expectations placing them at a median stock share price of $201 per share and a high stock share price of $237 per share. But when it comes to 3M's dividend, this is where it's most important for the dividend investor to listen in on. They have been paying their dividends out for 63 consecutive years, all while increasing that dividend year over year, with their current dividend yield sitting at 3.32%. So again, just another boring company that's going to pay you to invest as a long-term investor. Moving right along to our third dividend king is a company that I've actually recently spoken about. So I want to keep it short, sweet, and to the point when it comes to this particular company, but also highlight it's a little bit more exciting, not so much like our Parker Hannifin. In 3M, we have Target, ticker symbol TGT. Now, Target, founded back in 1902, has an incredibly rich history and has grown itself into the 8th largest retailer in the United States. And just taking a quick glance at their stock share price, we can see here it ran up to a high of $263 per share before coming down to $228 per share, making for a nice little correction moment. Now, most importantly is to recognize that holiday season is right around the corner. So of course, analysts are only expecting Target to continue to grow, coming in at a median stock share price of $281 per share, a high stock share price of $337 per share. And of course, as dividend investors, we're most interested in Target's dividend. They have been paying dividends out for 50 consecutive years, increasing that dividend year over year, with their current yield sitting at 1.59%. And while not incredibly high, absolutely a safe bet to make that we can just sit back and collect on those dividends. Moving right along to our fourth dividend king, we have Stanley Black & Decker, ticker symbol SWK. Stanley Black & Decker is a world leader when it comes to power tools, lawn and garden equipment, as well as other industrial products. Now, Stanley Black & Decker had a heck of a 2020 as a lot of those DIY projects took off when everybody began to work from home. 71% of Stanley Black & Decker's revenue comes in from power tools, so go figure, they had a heck of a year. Just taking a look at their stock share price, it rose to $220 per share before dropping back down to $177 per share. And analysts only have high expectations for Stanley Black & Decker as they are pivoting in more of a green direction, moving towards the electrification of their mowers, trimmers, and other outdoor equipment, which is the exact direction that we are heading in come the future. So analysts are projecting that Stanley Black & Decker is going to jump to a median stock share price of $238 per share and a high stock share price of $281 per share. But of course, we are here for the dividends. So Stanley Black & Decker has been delivering through on those dividends for 145 years, consistently paying those dividends out and increasing them for 54 consecutive years, with their current dividend yield sitting at 1.79%. Again, nothing too crazy, but certainly incredibly safe. And last but certainly not least, we have another boring company to close us out for the day on the fifth dividend king, that being W.W. Grainger, ticker symbol GWW. It has been around since 1927 and is just another industrial supplier with over 1.6 million products, so I'm not even gonna begin to name half of them. Now, when it comes to W.W. Grainger, very similarly to Parker Hannifin and 3M, they have just been doing a standout job for decades, and they're only gonna continue to deliver through for decades to come, simply because they are that less sexy, however incredibly lucrative type of company to invest in, with all of their products being a necessity for industries across the board. Now, just taking a quick look at their stock share price, we can see that they rose to a high of $474 before dropping to a low here of $417. However, looking ahead, analysts only foresee growth when it comes to W.W. Grainger, with a median stock share price coming in at $490 per share, a high stock share price of $525. Of course, we are here for W.W. Grainger's dividend. They've been paying those dividends out consecutively for 50 years, increasing them year over year, with a current dividend yield sitting at 1.58%, another incredibly safe dividend investment that you can pull as a dividend investor. Now, that is it. Those are the 5 dividend kings that you can get invested in right now today. Not even have to break a sweat, lose a minute of sleep to invest in these companies, because most likely they're going to be around for decades to come, all while sending you dividend paychecks on a quarterly basis. Now, most importantly here is I am by no means a financial advisor. Just make sure before investing in any of these companies, you do your own due diligence. However, if you liked what you heard, you have an opinion or two, drop those comments below. I'd love to read through them. Certainly feel free to go ahead, help me out by tapping on that thumbs up button. It helps me get the word out there and growing this channel. And of course, if you haven't already subscribed, go ahead, tap on that subscribe button while you're at it. And until the next video, YouTube, I look forward to seeing you all there.